Hey everyone, and welcome back to Everything Tesla stock. It's no news that Tesla, like many car makers, is struggling to ramp up sales amidst production challenges. And with the challenging market conditions, it is only expected that investors seek to make decisions that are going to secure their investment and, if possible, rake in some profits. Warnings like that of Chamath Palihapitiya are factors that are likely to influence investors' decisions on the stock. According to Palihapitiya, this is why Tesla bulls need to be ready for what's coming for the car company. More details in this video, but before we get into it, don't forget to like, subscribe, and turn on bell notifications to keep up to date on everything going on with Tesla. With that said, let's get on with the video. Canadian venture capitalist Chamath Palihapitiya has shared some insight into what he believes is coming for Tesla in the future. Palihapitiya is a former Facebook executive who runs the venture capital fund Social Capital, and is a long-term bull for Tesla and the stock market at large. The CEO has been bullish on Tesla since at least 2017, when he bought Tesla's convertible bonds, revealing that it was his favorite investment at the time. Likewise, the billionaire investor had some time ago claimed that Tesla's stock could be worth 3 times its value at the time, which will make Tesla's CEO Elon Musk the first trillionaire. Palihapitiya had advised investors not to sell their Tesla shares, revealing his concern as to why people would want to sell a stock that works. He added that investors need to hold onto their shares rather than bend to short-term profits. The Social Capital CEO further claimed that Tesla's CEO Elon Musk had consistently been one of the most important entrepreneurs in the world, and he had a good grasp of the industry. In similar news, while speaking on Tesla's energy business, Palihapitiya told CNBC that Tesla's growth is much more than electric cars, stressing the potential of Tesla's renewable energy components to make the EV company worth trillions. At the time, the stock investor revealed that Musk was figuring out a way to harness the energy, store it, and then use it to help people to be productive and fight climate change. This could be said to be an accurate look into Tesla's future, as Elon Musk recently revealed the company's plans to accelerate its solar and energy storage business, adding that it promises a vast clean energy business in 2022. According to Musk, although Tesla's energy business growth has been limited by supply chain constraints, the plan remains to expand production and deployment faster than vehicle production once the supply chain issues have been resolved. Tesla's CEO also stated that the company is looking to build a factory dedicated to the utility-scale Megapack energy storage product in response to growing demand. According to Palihapitiya, Tesla is a distributed energy business, adding that it will eventually be worth beyond its valuation at the time. Seeing that Palihapitiya has so many good things to say about Tesla, and judging by the way many bullish prediction sentiments that he's made, it's rather surprising to see that he eventually recently sold his Tesla position. This was a big deal for Tesla's investor base, seeing that the long-term bull of the company had to sell off his shares. According to Palihapitiya, the move was a means of sourcing capital to fund other investment ideas. He added that since he does not have an infinite pool of capital, there is a need to have enough funding to execute these ideas. He did, however, state that although he is bullish on Tesla, his thesis on the company has changed a bit. Palihapitiya believes that the EV market seems rather underestimated and continues to grow with the emergence of new companies in the industry that are gradually becoming a huge competitor for Tesla. The Detroit car maker General Motors has actually taken things up a notch with the recent launch of a program aimed at tracking down and studying the driving habits of owners of the Cadillac Lyriq, which is the first electric model of its premium brand. The car company intends to improve its products and services by analyzing how its customers use their vehicles. And in a bid to boost the sales, the company also offered interested customers a discount of $5,500 on the car. Likewise, Ford Motor Company recently turned in great second quarter results. The company appears to be ready to outrun Tesla in the industry. Seeing that the automaker is going electric, it will most likely be compared to Tesla in many ways. Also, the company has almost $3 billion in operating cash flows that can be used to support its aggressive plans to ramp up EV production. This increasing level of competition for Tesla means that the company has to do a lot more to maintain its position as a leading EV company in the industry. One other factor that could have caused Palihapitiya to make such a move is the rising state of inflation, which has affected not only Tesla but the EV industry as a whole. The Social Capital founder and CEO revealed in a podcast about his concerns regarding rising inflation. Palihapitiya said he thinks strong inflation is here to stay, describing the market condition as persistent. He also revealed his uncertainty in investing in the current market. It's not so surprising since inflation has been a major challenge for Tesla, especially in recent months. The company has struggled with the rising cost of raw materials and supplies, which has caused an increase in the price of its products. Musk has stated that although the company wishes to make EVs affordable and available to as many people as possible, it's been very difficult with inflation at a 40 or 50-year high. Musk added that he thinks the official numbers actually understate the true magnitude of the inflation. He stated that there is a lot of pressure from suppliers, requesting up to 20 to 30% cost increases for parts from last year to the end of this year. Recent news has also revealed that Tesla expects a prolonged supply chain crisis to limit production capabilities at its factories, which is also going to continue through the rest of the year. Following the spike in prices of Tesla's electric vehicles, the company's reported a smaller than expected drop in quarterly profit. Tesla's total revenue fell to $16.93 billion in the second quarter from $18.76 billion a quarter earlier. Going by Palihapitiya's emphasis on the resultant effects of inflation, this could be a sign that investors should be ready for unexpected price changes in the company's stock. If there is a continuous price hike in Tesla vehicles, this could greatly affect demand for the cars, which will eventually take its toll on profits and stock valuation. Tesla has been battling with several market challenges, which are not limited to inflation, and it's also affected the stock, throwing it into a series of upward and downward trends. Especially following the lockdown in Tesla's Gigafactory in Shanghai, China, Tesla's deliveries of new cars for the quarter ending in June were down by almost 1/5. According to Tesla, the fall-off is a result of supply chain disruption and a series of COVID-19 lockdowns in China, which is a major cause of its production problems, since it lost its production days due to the closure of the facility. The company's car delivery at 254,695 new cars over the next 3 months ending in June was below expectations of analysis, which placed it at 295,000. Coupled with the production challenges in China, the EV company faces hiring and supply chain challenges at its new Berlin factory. Although Tesla officials claim that they expected a slow ramp-up at the Berlin factory, production levels seem to be lower than expected. Despite the several delays in opening the factory, workers in Berlin managed to produce under 9,000 vehicles in April, May, and June combined. This could be something of concern for investors like Palihapitiya. Likewise, the recent liquidation of about 75% of Tesla's Bitcoin holdings also signals a possible financial struggle for the company. However, going by Palihapitiya's advice about choosing the right investment in the technology business, it seems that the stock investor has still got some positive evaluations for Tesla. He stated in an interview the 3 phases of the evolution of technology businesses. According to him, there is the experimental phase, which can take most companies up to 5 to 10 years to survive through, to the product market fit phase, and then the scaling. With likening it to Tesla, Palihapitiya believes that for the EV company, the extreme return has been generated, taking it beyond the experimental phase to the product market fit phase, which is poorly understood by most investors. He further added that the real opportunity is in realizing where each company is and where the scale of its returns are going to come from in the future. It is safe to say that even though Palihapitiya is into pretty much any working stock and could still possibly be bullish about Tesla, he likewise believes that the stakes might be too high. Investors may therefore want to reconsider their stakes in the stock while considering that the many market challenges for Tesla are going to have their impacts. The stock market is always volatile, so it's important to be ready for unexpected market challenges. What do you think about these warnings about Tesla? Should investors be worried about Tesla's future? Let us know in the comments, and while you're still here, go ahead and click on one of these 2 videos on your screen. See you there!